Hello, hello. All right, cool. All right, we got a little action here. So, um, let's see. On a 15-minute chart, we're looking at a swing low on the left, swing high up at the top. We got a little fair value gap down here in the blue. That's where price is kind of bouncing around in right now. I'm bouncing all over the place with my chart, zoomed up like 20 times the speed. So right here, we're waiting for price to show some reversal signs. Um, Looks like it kind of likes this area for some smart money. I'm going to target buy side up here. Need a strong move up. Getting that now. Dollar falling down below. It's a good sign. Want the dollar to fall so price can move up on the market in ES. It's a nice big green candle. I'm expecting some turbulence through this zone we're going through right now. Since it sliced right through and it was a previous bullish fair value gap. We're going to get that. Like to measure the size of that right there. We're not buying in a premium. We want to buy in a discount. Beautiful. Add there. Set our stop right below the candle. If this idea does not work out, we don't want to take on more risk than we need to. Just a little volume imbalance. Price is going to fill that in. We'll take another add in there. Keep that stop right up. Now one of my targets is this buy side liquidity at the top. On a 15-minute chart should take that out since it took out a previous buy side that was lower than that. If it is bullish and it wants to move up, which I believe it is. I'm going to take profit at 5 handles. Got to pay the trader, move our stop up to even at that point, take risk off the table. But we'll get there when we get there. Liking price right now. It wants to move out, and the bodies, yeah, they're respecting the fair value gap. Now we want price to leave the zone. We want it to get through this blue fair value gap it is in right now. If it comes back down though, I'm going to take one more. Build that position. Yeah, we'll take one in there. Once it comes back down, bingo. There you are. Full position, 3 contracts. Not even sweating. Filling that volume imbalance. Let's move from here. See price consolidates. And we're going to find our order block at equilibrium. Look at that. It's touching it. Respects that zone. Look at the bodies. It's beautiful. It's a thing on beauty. And that orange line is an equilibrium from a larger time frame. So look how it bounces right off of that. Nice, nice, nice. Now, since this zone sliced through before it was a bullish fair value gap, I changed the color to red because you know there's going to be some resistance almost going through there, but we're going to take one off there, 5 handles, and we're going to move our stop up to even. Now, trading view is kind of annoying in this. I couldn't find my stop loss underneath that, and I couldn't move it, so I had to kind of keep a mental stop, but it is what it is. All right, we're flipping all over between different times charts here. So our next target is going to be the buy side liquidity. That's where all those orders are going to be resting, right above the that swing high, right at the end of lunch. So we're going to attack that. And on the larger time frame, we've attacked one swing high prior to that. So I'd expect to take out that where my sell order is up top in the 40-20, 40-30 range. Probably around the macro time was what I was guessing. But it is, look at that, it's respecting the zones. And then we are going to measure the move too. So you find the standard deviation, -1.5. So we're going to kind of aim for that. I would normally take one off there, but it's close to the buy side, and I'm strong in my conviction. So I'm gonna hang out there and let my order do its work. Okay, changing time zones or time frames, going back into the 5-minute. So you can see a bullish fair value gap in there. It's going to hold 50% of that, which is nice, very nice. Very, very respectful of the zones. I'm all congested. And once that goes through, boom, we're taking one off. And we got one contract left on the table. I would like, yeah, this is what I was talking about. I gotta put a manual stop in here. We're gonna set it below the low on that swing low. Right under equilibrium. That little breaker, I was just making shit up, I guess. I don't know. Sometimes you look for things, you find them, but it's good to recognize that that was not a breaker. Again, looking back at the larger time frame. Look at that. Holds that. Used to be a bearish fair value gap that was used back around, what is that, like 140-ish. Changed it. Pull it when it goes right through, you're gonna use it as support. So price is moving. The dollar is actually falling too. If you look at the bottom, that's a good look. Price keeps going. Price keeps going. And on the 15-minute chart, which is what I was playing, on the left, that spike where all the way on the left of the screen, that's the 50% consequent encroachment of that wick. So that is my price target. I could have said, hey, I want it to go up to that blue line, but I'm not trying to take on more risk like that, which it eventually did, and it actually went up to a larger equilibrium level, but that's what we're just taking it as we go. Look, that's a nice trade right there. About what's that? 40-28, 40-10, about a 20-point